check, mic check. What's going on What's going on every morning? Good morning, everyone. What's going on? How you doing? This is Jordan with Conquer Trading and Investing, and we are getting ready here to spend our time together preparing ourselves to conquer the markets. Happy Friday, everyone. Fun Friday here at CTM. We're going to be able to make sure that we leave for the weekend with the much clarity that we've been building all week. Hope you're all well and doing great. Head Snack has been building a position, dollar cost averaging these past 6 months or so, ever since I think a little bit before May. He was coming off of zero. He's now building into a position of strength. And whenever Bitcoin resumes, and we looked at yesterday, if you missed yesterday's video, it was absolute pure signal talking about the most important signal in Bitcoin is not looking at Bitcoin in relation to M2. It's looking at Bitcoin in relation to the monetary base total. It's as clear as day. And the next time that they resume their balance sheet expansion, why it won't be the bottom of Bitcoin and crypto and the equity markets will have bottomed before. A lot of people wait for the Fed to go ahead and they're like, I'm going to wait for the Fed to pivot. They're a little bit confused about what the Fed pivot is. They think that the Fed pivot means returning to quantitative easing. And they say, when Fed pivots, I'm going to jump in there and yeah, that's a great place. That's the sweet spot, right? That's when you're going to see all the speculation return. And that's when everyone's going to become interested. But we are going to be positioned way before, right? And we will begin distributing, right? Smart money distributes on the way up. They accumulate on the way down. That's how we do it. Everyone, great to be here. We had such an important week this week here at CTM, public live streams, strong sessions. If you have the opportunity on the weekend and you need to catch up, go ahead and do that. We have an important consumer sentiment coming up 10 a.m. Eastern time. It's a big one. I've seen it move markets before. It's hard to say if that's going to do that today in light of Federal Express's earnings and not in dire warning that we're headed in towards a global recession, that their business basically takes the heartbeat, the pulse of all businesses worldwide, and things are down. We got a dire warning out of the IMF. We'll talk about that at the end of the session. Next week, everyone knows we have the FOMC next week. And I have to be honest, I feel a little bit better going into the FOMC with price on its, on the defensive rather than earlier in the week when price was ripping to the upside. If we were coming into the FOMC, I was a little bit nervous. I'm going to be very interested come Monday, first of all, to see over the weekend if there were any leaks to about what the Fed's intentions are or whether or not they continue to be ready for a 75 basis point hike. And I will be looking at the expectations for a 75 basis point, 100 basis points rate hike come Monday. People talking about a 200 basis point hike now. I don't know. I guess stranger things have happened, but some people are just looking for engagement, I imagine. This is pretty neat or pretty neat. This is worth talking about since we spoke about it yesterday, that the U.S. is denying the plans to refill the strategic petroleum reserves below $80. So let's look at that in relation to oil and what's going on with oil. And I'm going to be more mindful, by the way, let me get this on auto, right? I'm going to be more mindful of zooming in to give you everyone a clearer view of what I'm watching and how I'm watching. Rico, yeah. So maybe at the end of the session, Rico, I'm going to go ahead and bookmark that comment over there. And then at the end, we could go back and for sure look at that. And Rico, I think the second biggest factor in Bitcoin, this is the way I view the market, by the way. I think the second biggest factor in the monetary base being the first one, Bitcoin is a hedge against monetary debasement. Right now in 2022, the currency is not being debased. Oh, this is not Bitcoin's base case, is it? Over a long time frame, what is the mathematical certainty of the US dollar to be debased? It's a debt-based system. It's not sustainable otherwise. Now, but Rico, the second most important factor in Bitcoin is its adoption, right? And the network effects because of that adoption. And if those were at any point in time to cease, now they're not, they're growing. Even in this bear market, they're growing substantially. But if they were, that would be a red flag. That would be a signal. But as it is, Bitcoin is undergoing S-curve adoption. It's very hard for all of us to wrap our heads around what exponential growth is. Jordan, diminishing returns for sure. Wait into the future. And I think even the biggest proponents of diminishing returns do not expect moving out in the future, if this thing actually does catch on, to continue with those diminishing returns. But that's a conversation for a different time later. So let's take a look at it. You ready? Let's take a look at the markets and build in and just have a little bit of fun today. We see, oh, this is not silver, George. This is oil, WTI crude oil. And you could see that it continues to consolidate over here. And I mean, a consolidation at this point is probably setting up, or could be setting up, for a continued move down. You had a fake out over here to the upside. We didn't buy. Do you remember the job we did protecting ourselves? If you didn't, and you want to go back and you want to go watch over here on August the 28th and 29th and see how we were able to protect ourselves from following a breakout that lots of people bought into. I mean, that's fine, by the way. Like, a lot of people buying the breakout over here from 95.50, because why it's fine is if that's your strategy, that you're just taking breakouts, obviously you're managing your risk off of it. So it's perfectly fine. At the same time, I am very pleased. I'm very happy that we were able to protect ourselves at that particular moment. Now, because of the fake out over here, right? And we just highlight it right there. You see horizontal resistance up there as well, coming back over here. Because we protected ourselves over here, but there's another fake down over here as well. So that makes it actually a little bit difficult. I was going to say, if there's a fake out one way, that leads to a prolonged move the other way. And maybe that's developing over here. But I would say the analysis that we have had all week, that this is choppy and we want to stay away from it and wait for further clarity, remains to be the right way to view and look at it. Now, going forward, let's call it into the end of the third quarter, as we're getting to the fourth quarter. If we see at any point in time, as the U.S. does finish draining its strategic petroleum reserves, and then we start seeing all of a sudden the price of oil beginning to rise. Now, the demand is not there. Global demand is off, and I imagine that's a trend that will continue. But we have elections coming up in the U.S., midterm elections. It's very important. If you do see a shift from one side to the other, right now we have Democrats in control of both houses. If that moves towards Republicans, at that point in time, you might beginning to see set up a more favorable environment for, let's say, oil and gas inside the United States, right? And then that's going to weigh on the market as well. If the Democrats hold on to their seats, that might signal that, the environment for oil and gas is going to continue to be a little bit difficult. That means that there's going to be no supply coming online. And then you might actually see the price of oil beginning to rise on that. So it's very complicated. We look into the TA to give us that unique advantage. What I'm noticing over here, and I wonder if we clone this line over here, I just want to take a quick look at it to see if it lines up perfectly off of those two touches. So how well is that line drawn in the first place? So yesterday, Brandon suggested that I go ahead and extend this line down over here. So when I extended this line, I'm not sure exactly how I had it, but what I did was try to pay attention what the market is paying attention to. That was this touch over here, and then this touch down over there. So I just drew it down like this. I'm going to go ahead and I'm going to clone this up over here, and I'm going to see what type of, it's kind of clean. It's kind of clean. It's a touch here, a close here. I know there's a little bit of wick over there, and then we wick into it there. But it's kind of clean. I don't think we need it like that. I think we could just go ahead and tidy it up, and we could draw a line over here, and we could be watching at any point in time if we see a breakout above there, and watch that for an early warning sign. I want to take a look at silver. So we're still like neutral. And by the way, it's Friday. So you're not looking at this particular point in time to be initiating new positions. What you're doing is you're trying to make sure that you have your pulse on the market. You're setting up any potential opportunities for Monday. If you remember last Friday, it's when we were able to tag silver. Even though it was on a Friday, it's set up for Monday. Great morning, Brian. I'm glad you're here. Great to see you. Nice. Thanks for bringing the positive vibe. Love it. Really do. Let's take a look at that silver. Let's take a look at silver, and where we left off yesterday, we were drawing this little bit of a pendant that was forming. And then we talked about going ahead and locking in profits early if price came down and tagged there. Anyone who's in the trade, if you're not in the trade, it's still an amazing opportunity to learn not only TA, but also position management. Once you're in the trade, what do you do? And you can see right now that would have been tagged, right? You would have been stopped out of the trade. Two interesting observations to make right now. Three interesting observations to make. Number one, if you extend this line out, right, it's going to extend that line out like that, you could see that price has come down in and it has tested that, okay? So you still have, let's call it a quasi-bullish structure occurring over here on this breakout, because you have the breakout, we stayed aside, you had a retest, and then it broke above. We still stayed aside. It came up to here, and now we were looking for the retest. As that retest of this broken resistance was confirmed as support, and you could see that support being tested again now. On the resumption out, that was the entry that time. And then after price, risk rally came off hard this week, right? As the risk rally came off, silver was also prone to it. And I think that the second observation is that this would have been a better exit, because we drew in this pendant yesterday and we were watching it after this touch over here. We had one touch, two touch, we drew in the pendant, and that would have been even a smarter place, a little defensive. But you have to understand that we are defensive because of the nature of the market right now, and risk off is apparent and it's strong. So look, you learn from everything. This is an opportunity to say, you know what, that was smart in being a little bit defensive in taking, instead of just a break even, locking in a tiny bit of profit. Probably would have been better or smarter to lock in a little bit more. The third observation is that this still holds, right? A breakout above this trend line, I'll extend it now. That's what I would be waiting for. Even though you could have a breakdown into this broken resistance held as support once, if it holds as support again and resumes up, I'm not going to take a trade off a resumption up off of support, right? Why? Because you're coming right into that resistance. Let's let it prove itself. Breaking above that area of resistance over there, that would set up this trade. So I'm going to put this to a yellow light at this point, right? It's not green lighted. It's not ready to act tomorrow, but we'll just go ahead and yellow light that. Zooming out, right? Strong downtrend, clear and apparent, but we were able to go ahead and we were actually to pick that turn, that counter trend trade. Is this setting up for a short? If I was shorting the metals, I would be going for what has been weaker, and that has been gold. Let's take a look at gold this morning, and let's just break it down actually, right? You remember on the upside over here, we talked about, even though this breakout was happening, that we wouldn't take this breakout. We would wait for gold to break this conservative line over here if you were interested in gold, because it was lagging and it needed to prove itself a little bit more. And silver was leaning, and the opportunity was on silver. And you could see that gold actually faded and broke down first. What could we have done better? And that's very easy and apparent. And this is also a very good lesson. I'm just going to connect these two over here, right? You can see one touch, two touch, three touches, right? We saw gold go for the breakout, and it didn't have the follow through that silver had. Silver put up like a 5% day, right? Gold didn't do anything, and then it faded down. And once it came down over to there, on this touch right over here, that candle, we should have been able to extend this line out at that point and been waiting for the entry occurring right over here. We should have seen the risk off move occurring, and then that bring our focus over here. And this is kind of, it looks like a pretty easy thing that got away from us. So that's important to talk about. But again, that trade has now gotten away. I'm going to go ahead and clean up these lines over here now, right? And this line stands, this outer line over here. I could get rid of this stuff. This is from the past. This is all irrelevant right now, right? I don't need that messing up the chart. And this is clean. And this right here, talk about TA. TA is so simple. And more importantly, TA is nothing without risk and money management. All right. I know a couple of weeks ago, we did a strong session on risk management, where you place your stops. We did a strong session on position sizing, how you position size off where your stop is placed. I wish I could go ahead and edit those clips out for y'all, but I'm not able to do that. But we will continue to review and review often. Let's take a look at what's going on the DXY. And the DXY is just running into that horizontal resistance, and it's having trouble closing over it right now. I don't think there's too much to read into this at all. We have next week's FOMC. That's what the market's riding on. And yeah, this is for me, no man's land right now. We'll just wait and watch, right? I can't even think about any upside potential next week breaking above here. And then if we get a clean retest and a resumption, then we could be looking at further upside extension with the current and the momentum continuing to push that way. The 10-year is about to make a new high over here, a new yearly high above 3.5%. And then we have the equity markets. And I could say that, wow, first of all, the break of that trend line, I have to say that trend line was the right placement. Do you remember that we didn't move it down over here after we had the fake down over here? We kept it over here. Price held. Here it broke and it came into our target. Our target was this area of supply. Price is now trading lower. This makes a lot more sense to me than last Monday when the market began pricing in a 75 basis point hike. Now the market has priced in not only a 75 basis point hike, it's pricing in the probability even potentially of a 100 basis point hike, and the market is trading a little bit lower. Whether or not we just saw some stops cleared and this support is going to hold, or we're going to continue to melt down. Next week on the back of the FOMC, we could be taking out the June low. So right now, that's setting up an important area to watch off of. This is a great area coming into next week for us to be able to, on a breakdown, manage our risk off. We'll know where we're wrong. People that are looking right now still to continue to build into any type of short position, it might be setting up for a move pre-FOMC. NASDAQ, same thing. So I had the question mark here because I was wondering if that was the correct placement. As you know, it's I can see my voice. Do you hear my voice? The uncertainty, still uncertain. It's not clear, and I like that because it should never be crystal clear. It's not crystal clear. When you're talking about discretionary TA, there's one thing about it. There's a high degree of discretion involved. So that means you want to be as clear and you want to be as truthful and as honest with yourself as possible. That is essential. And this continues not to be clear over here. I think that why I could say we never had any closes below here until this breakdown, I could see the market definitely paying more attention as the wicks came into that area down. And it would have been better be looking off of where the wicks were coming into. That would have provided a little bit better of a look. And does that even belong here anymore? Now that we've broken down from it, does it offer anything except a little bit more noise on the chart? I think it's more noise on the chart. We're paying attention right now to this area of supply. Same thing here on the S&P 500. That would have served this purpose. Well, it did. We were just saying we expected on a breakdown over there to come into that supply. There it is. Let's keep going. Let's take a look at what we're seeing. These charts are going to disappear now in that all happiness of happiness. I'll explain why in a second. We had a beautiful upgrade. But you can see over here on Bitcoin, on the left side, you're looking at the bullish side. On the right side, you're looking at the bear side, the sell side. And we had this breakdown of this line over here. And why that occurred, it's still like neutral. When I say by neutral, I mean on the buy side over here, you have this descending wedge. and you had the breakout of that descending wedge, and you're coming in for a retest now, and you could see over here, it's into support at the, so that's like one check mark for the bullish side. And then over here, you have a check mark for the sell side after that trend line break over here. And this is breaking down. So I would say that there's a lot of undecisiveness, a lot of neutralness going on right now in Bitcoin. And that's simply where it is. Ethereum looking a lot different. Could I make the case for any type of bullish structure still in play in Bitcoin, in Ethereum? Yes and no. When I say yes and no, if you're doing CTM 1.0 on the breakout over here, your stop loss is actually the low right over there of that move. So that trade is barely hanging in by a thread. But we were looking and watching what would happen yesterday before this broke down from that trend line. Right over here, we had this trend line in. We talked about a breakdown of that trend line leads into this bottom trend line. And then that's breaking down right now. And we said a breakdown of that trend line, it opens up the door for a bigger move down. It's about 20% towards 1250. Let's go ahead and make sure that's correct right there. Hold on one second. What we got over there? I don't know what that is. There we go. So we're looking at a move to 1200. Okay, so a move to 1250 is about another 14%. That's the first area. You can see this resistance over here. Boom, boom, boom. That's the first area on a breakdown over here that we could be testing. And it's starting to break down as we speak right now. You can see it's looking to close below that trend line over there. Be very, very, very careful. Now, I don't know why, personally, the extra pressure is right now on Ethereum. It's very vague out there, opaque. People are looking at the transactions building up in the mempool, but the thing is that every single explorer gives different results. The thing is, I think only Vitalik running the real master node could give us that type of information. Did you get all the innuendo over there? But I personally think, by the way, my own thoughts is that the current move to proof of stake is going to wind up being quite bullish for Ethereum. For the near term, for the intermediate term, I don't know how long that lasts, and it could last years. Ultimately, I think that it was a fatal flaw, but I think that's going to take a long, long time to play out, and I continue to be quite bullish on trading Ethereum. See why in 1 second. I think this is an appropriate look right now as far as when we might have the first opportunity of a breakout over here on the upside and a resumption of the trend on Ethereum. And that might be some time. That might be some time right now. The markets overall are quite risk off. If that continues into next week, especially off the back of the FOMC, it is very possible that we take out the June lows, not only in equity markets, also in Bitcoin and across the cryptocurrency markets. And if that's the case, it could be quite a while before we start seeing any bullish momentum enter the markets. Now notice that I'm not saying that that's what is going to happen. I literally have no idea. We have to wait and we have to watch not only what the Fed does, how high does the Fed hike, what is their communication about expectations going into the remainder of the year about what type of policy they're going to have. Now, I was more worried when the markets were actually rallying. That meant to me that the Fed was going to have to come out super strong. As the markets are on their defensive right now, I feel a little bit better. I was thinking about this morning. I was making some matcha. I was thinking about that. And the other thing I just want to mention over here is that we do not, or you have not yet hit the like button. If you're here listening this morning, go ahead and smash that like button as we get going together. But we don't have a Fed meeting in October. That means the next meeting is not until November. That's a long time. That's a couple of months we'll be looking at. And, that is going to become very important. It'll be the only thing that we have to go off of. And we'll just have to wait and we'll have to watch and we'll have to take it as it comes. Thank you, Hunter, for getting on the like button. I appreciate that, my brother. I really do. So the reason that we won't have to, or I won't have to be looking at these charts anymore, which by the way, are absolutely beautiful because CTM been able to come through with an upgrade. It's a lot easier. It's a lot better. Now, whether or not I have to tidy them up as far as I like, well, first of all, I like two things. This is very easy to do. Well, hold on. Let me explain. Before, I had to have a chart showing the bullish side and a chart showing the bearish side. Now for both Bitcoin and Ethereum, that's been incorporated into the same chart. So that makes it a lot cleaner. It's a lot easier for me to manage. But at the same time, I'm thinking about this now. And I also, I don't know if it's because of habit, I also like looking at the bullish case on one side and the bearish case on the other. So that will remain flexible, I guess, or I suppose. However, this has become my preferred chart. It also tells me the current active trades. It's telling me the entry, the stop loss on them, the current positioning, the profit or the loss. It's absolutely beautiful. I want to talk about this for a little while. I want to talk about it in relation to, I think I'll start over here. On the bottom left, you're looking at the Bitcoin, right? And you're looking at, I'm sorry, that's Ethereum. And you can see the price chart. This is going back to 2020. This is Ethereum price chart. On the right in the purple is Bitcoin. Very similar structures, right? We know Ethereum has been outperforming Bitcoin, but very similar price structure. Over here, you're looking at the equity. This is both the buy and sell trading Ethereum, right? And notice here, even as the market comes into this massive correction, gains continue on the upside. Actually, that's not the chart I want to show you. Let me show you that in relation in a clearer way. It's going to be beautiful. Before I do it, I just want you to notice as you're looking at the equity, even though it looks really beautiful here on Ethereum, on Bitcoin, if you look at them together, this is on the same scale. The returns of Ethereum absolutely crush and dwarf the returns of Bitcoin. This is what I wanted to show you. This is looking at the price of Bitcoin and only buy-side trades. All right, so you can see that clearly and well outperforming buy and hold. But as the market goes into this downtrend over here, this is the April top, this is the November top, this is just standing still. Now you could look at this also just from the sell side alone, and you could see it's only when price goes off, the short side over here is able to capture those gains. And the magic is putting them both together. When you're putting them both together, you're clearly outperforming buy and hold. But even as you look at the market go more or less sideways, gains continue on the upside. It's really neat to view it like this. We'll start with Bitcoin, right? I'm going to jump up over here, and I just want you to see this is from 2020 to today. So it's only 2.5 years. 2.5 years, and you're seeing that, well, the return is 958% on 125 closed trades, only 31% profitable. A lot of people, a lot of aspiring traders, they look for a really high win ratio. They don't want to be wrong. You don't really yet have a defined plan about how to have an edge in the markets. And so your edge is that, well, I want to be right. That doesn't really work out. Notice the profit factor is pretty strong. And more importantly, over the last 2.5 years is the drawdown. As we go back further than 2.5 years, I want you to keep an eye on what the drawdown is. It's also neat, right? If you compare it to buy and hold, right? Buy and hold, obviously, as we enter that bear market, gets destroyed. It becomes very apparent that is not the way to go. And then also, if you look at the purple lines on a percentage basis, that's the drawdown. So as we go further back in time, I want to continue to look at that. It's also interesting to look at it as far as Ethereum is concerned. You know, in that same 2.5 years, the return is significantly greater. Now, the win percentage is also, it's about 8% greater. That's not where that difference of a 10x in return is coming from. Profit factor is through the roof. And notice the drawdown is even lower. Notice the drawdown is only 19.31%. As we go back and you're going to see these returns drastically increase, I want you to keep an eye on the drawdown as well. And I'm keeping this on percentage, right? So that you could see the drawdown. And Ethereum right now is into a pretty significant drawdown. It's about 19.3%. I want you to go back and see historically is what it's been as well. Let's do that now going back to 2018, because 2018 is a bear market, right? It's a bear market, so it's interesting to look at how these two performed during the bear market as well. And you could see over here, this is now Bitcoin. So instead of the last 2.5 years of, this is compounding interest at its finest. Instead of a 950% return, you're now looking at an incredible return. And notice the percent profitability is the same. It's still that same 31%. And notice the drawdown is still the same, 23%. Now you're talking about 4.5 years. That's pretty good. That's pretty decent performance. Let me move that towards the percentage on the drawdown, and you could see what that drawdown has looked like throughout the past 4.5 years. Ethereum, the returns now start getting a little bit ridiculous, a little bit spectacular, but that's all fine. It is what it is. 158,000%. I want you to notice the percent profitable has come off a little bit. Instead of that 39% over the last 2.5 years, it has come down to 34%, down almost 5%. Okay? But the drawdown is, look at the drawdown. 4.5 years, 22%. Two bear markets. Ethereum at this point, if you were buying and holding, has been off 95%. 95% drawdown in the last bull market. What type of percent return do you need to recover from a 95% drawdown? Does anyone know out there? If you know, put it in the comments. I believe 50% drawdown, you need 100% return. 95% drawdown, is it a 200 or 400% return you need? I'm not sure, but it's substantial, right? And then we could go ahead and look back further. And this is going back to 2017 now. We just looked at from a bear market. Let's include a bull market. If you remember, the return through the bear market from the beginning of 2018 to present was 11,000 with the bull market. Now you're looking at some beautifulness, right? Percent profitable remained for these 5.5 years, 31%. Maybe you need to rethink about your need to be right all the time. Maybe you need to rethink your need about pushing your winners, right? That's essential formula, right? And then the drawdown over here has stayed consistent, 23%. What about Ethereum? Now the returns might be a little bit, ridiculously at this particular point because you're adding in the bull market. It is what it is. The percent profitable has not changed. It stays at 34%, right? The drawdown has not changed. It stays at 24%. That is what we're doing over here. When I talk about what we've built at CTM is astonishing. And the truth is, and you could tell by the tone of my voice, I was telling my wife last night, this is why I tweeted this, because I was telling my wife that the people I work with are so incredibly intelligent and talented. It's true. It's iron sharpens iron. And that was the intent of why we started this when we started it. It was pointed out to me yesterday, and that's fine. It's all good. And this was a comment over there. By the way, thanks for the kudos on the stream. Kudos to you. That was because of the amazing updates that took place that I'm showing you here this morning. Some of the amazing updates to the UI, and was really, really enjoying it, pointing out to the people who have contributed to that. Kudos to you for creating the environment to attract the hive mind. I mean, the hive mind in the past was fun, but what we have today is extraordinary, right? And by the way, looking at people like Roman has been with us since I think it's April or June 2020. And that really is, it's the truth is about 60% of the community has been with me and for that long. Kudos to you for creating the environment to attract the hive mind. I joined CTM for the TA, but in my heart, I was looking for this exact project. I can't read that. I want to see what that says. There we go. You way undersell CTM 2.0 on the public side, maybe for a good reason. I don't really sell it at all. See, I'm so focused on building. I'm so focused on working with CTM that I don't sell it at all, right? And is there a reason for that? No, there's not a reason for that. I probably should, but the thing is, and this is from the heart, and this is truthfully, that opportunity to work with me and on team, on my private team inside the Discord is going away. It will still be available because the thing is that over time, new talent is attracted, and that becomes a really important part of the overall project that we're working on. But it will take much substantially longer for anyone to make their way into that, and it'll just be a different aspect, you know. I think that when I had the group open back in 2021, and the cost to get in was like next to nothing, you know, it actually wasn't good. It didn't create a good environment. It created a lot of people who were very, let's say, emotional, a lot of people who were very egotistical, a lot of people that was not conducive to the goals that we wanted to accomplish. And then like CTM for forever, there was a few people throughout of 2022 that were allowed in, a very small percentage. And what we've been able to do and able to create is absolutely, I wake up every day and I can't believe what I get to work on and who I get to work on with it. It's beautiful. Glad I stumbled through the door to find my new passion project, and I'm grateful for it all. It does, and I will, by the way, there will come a time, again, I mentioned it last week, and I really don't know when it would be because I'm in each every day working hard, building. I'm not a web developer and fixing things like that, but when the new update is on the site, as far as the pricing and the ability to get CTM 2.0 and all that, it will change. And even right now, if you do sign up, which is possible, and if this is of interest to you, I do invite you wholeheartedly. It's not like I'm trying to dissuade people from joining us. I just don't actively attract it. If you do, on the website, it doesn't mention anything even about CTM 2.0. CTM 2.0 is what it is. It's all included. I just want you to know that. 20x, Victor. Thank you for 20x. I mean, it's substantial. It's a lot. It's a bigger difference, an enormous difference, recovering from a 23% drawdown from a 95% drawdown. I mean, this is done on one trade. This can be done on one trade. We put up a trade or booked a trade off of the June low. I'm sorry, the mid-July into mid-August on the long side on Ethereum of 52%. So that recovery could be made in less than one trade. It's possible. The odds of you recovering from a 95% drawdown in one trade, I mean, that might take you, let's say, 1/3 of the entire run of the bull market. Volatility is picking up, Andy, as the markets are a couple of things I did wanted to point out over here. I mentioned the FedEx CEO warns that things are looking really, really, really bad. FedEx's biggest plunge ever. And then I just want to point out over here the IMF. I like to read between the lines of when these people speak. IMF saying that a harsh winter may spark social unrest in Europe amid an energy crisis. If anyone has a farmer's almanac, I'd be very curious to know what the forecast is for Europe this winter. I pray that it is a very mild winter, because people being cold, people being hungry, and people literally dying in Europe, it just doesn't make much sense to myself. We do have the resources. When I say we have the resources, we have, France and Germany have the nuclear power plants. They could be fired up and be put online. You also have access to cheap energy and cheap gas. Now, granted, that might be coming from Russia, and granted, you might not be happy with Russia going ahead and invading another country, but do you go ahead and cut off your lifeline and actually starve and freeze your people to death to prove a point? Or do you take note of what they're doing, the fact that you do not want to, in 2018, when it was brought to your attention that you were dependent on Russia, and that was a fatal mistake, and you laugh it off, do you now say, I misjudged that, let me cut my losses short? And I'm not going to do that by shooting myself in the foot and starving my fellow countrymen. I'm going to do that by continuing to take that cheap gas and then continue to build out different infrastructure so that maybe 5 years from now, I'm no longer dependent on there, right? And I want to read between the lines a little bit over there. A couple of things we pointed out where it says, if the large and sustained oil price shocks could fuel persistent rises in inflation. You'd think that rising energy is going to rise the price of everything and inflation expectations, which should be countered by a monetary policy response. Now, what is that monetary policy response they're talking about? This is the hard part, and I don't know, and this is why I bring it up with all of you. If a large and sustained oil price shock could fuel persistent rises in inflation and inflation expectations, that should be countered by a monetary policy response. Is that more tightening? Is that I hope that. I mean, what are you talking about? Are you talking about people freezing, people dying, and making the bringing on a greater depression? Is that the monetaries? You're not talking about printing more money and giving it to people, are you? And if you are, what does that mean for the future expectations of inflation? And what, so there's no clarification on that. I wonder what they're thinking. To the extent the central banks remain adequately vigilant, current high inflation could still cause higher compensation for the cost of living. So what they're saying is right now that, let me just reword that one more time. Let me read it in full and then I'll reword it. To the extent that central banks remain adequately vigilant, current high inflation could still cause higher compensation for the cost of living than usual, but need not morph into a sustained increase in inflation. Are they trying to say that the current high inflation could still cause higher wages to compensate for the higher cost of goods without morphing into a sustained increase in inflation? Is that maybe why they're tightening so much? Do they really believe that they'll be able to counteract these two forces? Or are they talking about compensation not being wages, but direct government assistance to counteract those high prices? I'm not sure. They speak in riddles, to be honest. I'm not really sure. There was one other part that I wanted to talk about. I don't really have it over here. Maybe, Peter. Maybe. We'll see what happens. Do you think that by the end of the winter that Germany has not one way or another capitulated and gone back to Russia? And if they do go back to Russia, do you think that what are they going to be buying the gas in? Are they going to be buying it in rubles? Or are they going to be buying it in euros? And if they buy it in euros, then they're really not the vassal state, are they? They've just kind of one-upped and continued, let's say, the eventual diminishing role that the U.S. dollar plays in overall trade. I don't know what's going to happen, and I don't know, and it's possible that maybe even Germany may pick up and go and say, you know what, I kind of like this new BRICS. Why don't we put a G in the BRICS? And Germany might feel more comfortable aligning with the cheap energy sauce and this other power that be in the world. I don't know. I honestly, and there's so many moving pieces. And the thing is that our leaders, or the people that our leaders, not our elected leaders, they don't really tell us what's going on or what's up in a very truthful way. So we have to remain vigilant. Forget the central banks, we need to. And it's ugly out there right now. It truly is. All right, everyone, going into the weekend, I hope you all have a wonderful one. It was a fantastic week here with all of you, and I'm grateful for that. And I look forward to next week. I hope you all have and enjoy your weekend. May God bless you. I'll talk to you all soon.